What is going on, guys? Welcome back to the channel. It's Meathead Money. Today, I've got a dividend stock for you. It's going to be a great buying opportunity that gives excellent dividends. It's kind of a bit of a sleeper dividend stock, in my opinion. It doesn't get a whole lot of attention, but it's going to be Capital Southwest is the company. They're a building development corporation and stock ticker CSWC. Currently trading at about $17.82. Currently over the year, down roughly 17%. If we look, a little bit longer, they're up 23% over a 5-year span and almost 72% over a 10-year span. So the current dividend rate is $2.16 a share, which is roughly 12.17%. So that's crazy dividends. The nice thing about this company in particular, if we look at the actual dividends that are issued, so you see they do quarterly dividends, but they also have, these others listed on here. And that's basically just a bonus dividend that this company gives out. So they're really proactive in giving out dividends. If we look over the course, let's see, back even 2012 here, so 40 cents a share, and then they gave, $2.75. I mean, that's pretty big bonus. Moving up, as far as a consistent growth rate, I would say they've been kind of stagnant up until like 2018. And from that point, they have been increasing or staying relatively consistent. So, 0.41, 0.43, now we're up, 0.5, 0.48 here. So it's trending in a growing position. Now, if we look at some of the history on this, again, it's not necessarily promising or, yes, this is going to be a great growth stock moving on. But for right now, for the time being, 12% dividend, can't beat that. And again, they throw out these bonus dividend stocks, or excuse me, bonus dividend payouts, which again, it's just bonus money, right? If we look kind of at the structure of it, so again, this is an internally managed BDC. It's a building development corporation. They specialize in credit and private equity, venture capital investments in lower and middle market companies with their EBITDA between $3 and $20 million. That's leveraged of 2 to 4 times debt through EBITDA through Capital Southwest debt position. So by doing that internally, it kind of helps on their operating expenses, which they have actually improved over the years. So, this is an older article, but at the end of last year, they lowered it about 3%. So that's good. Right now, 83 of their investments are first lien. That's based on last quarter's information, based on this article. So the bigger takeaway is that, kind of just how their investment portfolio is driven right now and how it's kind of sectioned out. So you can kind of see that here by percentages. So majority of it being this first lien and their current investment by industry. So they do have a wide range of customers that they deal with, which is good. It's not just solely in one sector. So they are very diverse in that, which is good. So top 5 industries, 50% of this portfolio. So it's by building services at 14%, healthcare at 13%. And let's keep scrolling through here. Dividends. So yeah, again, something to check out. I guess, guys, do your own research on it. This is kind of the breakdown of this dividend schedule that, again, showing from 2015 here. And just with all the supplemental, dividend pay that they send out here and kind of, how much this has been growing. And overall, with the SP 500, I guess we can look and compare that really quick. It has, obviously it hasn't really beat the SP 500. It's a dividend stock. So, there is some, this isn't necessarily in here to make it a growth stock, right, guys? It's, dividend stock. You guys are looking for consistent monthly income. So if you put it in perspective, for every 100 shares you own of this company at this current dividend rate, you're looking at about $220 annual dividend payouts, which is not horrible at all. Now, if we compare this year, with the SP 500, quite a big difference. If we span this out, over like 10 years, it's hanging in there. It's not obviously right to par with it, but it is growing, and it isn't as stagnant as you see with some other REITs or other dividend stocks where it doesn't really change much. So again, this is kind of pacing with inflation. So, the target price of this currently estimated is roughly $21 is what their average price target is, with a high of maybe $24. Again, though, it's still 20% upside. Plus, you're getting the dividends. So, in my opinion, this is a sleeper stock, guys. It's cheap, at $17, almost $18 a share. You can't really go wrong with adding this to your portfolio, get some passive income. If you guys like the video, smash the like button, subscribe if you want to see more videos like this, and catch you on the next one.